Today I'm going to give some information regarding that management accounting. Before that, I'm going to introduce myself. Myself, Dr. Santosh, Assistant Professor, Kristujanti Deemed to be University, Bangalore. So today in the management accounting, you see, well, coming to the introductory part in the sense, management accounting is a lifeblood of each and every business as well as organization while the manufacturing concerns. In this, it is the presentation of accounting information to management in order to help them framing the policies. So every management having their own policies, rules, regulations they're going to implement to this organization as well as management also. In the management accounting, it helps to the management to the day-to-day activities. See, for example, if it is a manufacturing company, day-to-day working capital requirements is required. So working capital requirements in the sense, like manufacturing concern in the sense, if it is a procurement of raw materials, purchase of procurement as well as procurement of raw materials, payment of wages as well as salaries to the workers as well as laborers, transportation charges, and even though we transportation electricity charges, and then advertisement, etc. It is a tool of decision making. So management accounting is a tool. It should be taken the proper decisions at the right time at the right place. Then it helps to management to perform the functions like planning, organizing, directing, and controlling. In the management accounting, you have to take the proper decision. So future projection. So next 5 years, where our company is going to be stand. So these kind of planning as well as organizing like top management, top level management, low level management, and mid level management. Okay, what kind of policies they're going to implementing? What are the roles and responsibilities should be done by the each and every department like that they're going to do. So directing as well as controlling also it was included in this presentation. So while coming to the definition you can see over there. So according to R.N. Anthony, management accounting is a concern with accounting information to the management, especially in the management accounting in the sense, financial accounting as well as management accounting in the sense, financial accounting, you have only the like figures, balance sheet, trading and profit and loss account, these kind of information only you're going to see. While coming to the management accounting in the sense, reports related to the company. So it is a purely optional. It is not compulsorily. That depends upon the company. They can prepare the management reports like a future projection, cash flow statement, fund flow statement, budgetary control. So these kind of information they can get in this particular information. Well, coming to the nature and characteristics of management accounting. So there are some few more points we are going to explaining in this particular concept. So mainly concerned with the future. So the decision making. So especially for example, in the pandemic year, the corona and on that time, many of the company they shut down entire business process. And that time, many of them had lost the job also. In that particular cases, what company they are going to make the decision? Okay, that is the best example for that one. So management accounting is related to decision making. The decision making in the sense it is, what are the action taken place for the future. It is mainly related to the future. So next future will be we doesn't know either profit will be a more, either maybe a sales will be a decreases will be less also. So what projections you're going to do? So the proper decision the company they are supposed to take. Either the company is going to expand their business, either maybe they're going to establish the business concern, etc. like that. So second one, internal use. So this management accounting as well as reporting should be prepared by the internal use purpose only. So internal purpose in the sense the management is of management accounting, it should be information is only used for the internal purpose only, not should be shared for the external purposes. So the management mainly it is a internal purpose. For example, internal purpose in the sense accountant of the company as well as mid-level management, they're going to see the time to time that information related to the company. They're going to prepare the internal use purpose only. It is that this information should be not given for the external purpose. Well, moving to the next point, financial and cost accounting information. See, financial as well as cost accounting information in the sense, finance in the sense, the day to day, it includes the interpretation as well as financial cost data. It helps to prepare reports and statement which can be used in management decision making. So financial as well as cost accounting. Finance in the sense, how you want to arrange the money, how arrangement of the finance. Finance is the lifeblood of each and every business. Without finance, you can't able to run the business also. So which are the sources you're going to we're going to we are going to arrange the finance. And the same way, the cost accounting. So what was the cost? For example, manufacturing cost incurred. Okay. So direct as well as indirect expenses, variable cost, fixed cost. So these kind of information you're going to get in this particular information. The next one is flexibility and presentation of information. This information should be in the not only in detail, it should be in the consigned information. While seeing the report itself, it be understandable for each and every the management. There will be prescribed format as well as the content should be the information to the management. While moving to the next particular concept, there is a scope of management. So, management accounting is an interdisciplinary subject. It concerns with various subjects such as financial accounting, cost accounting, management accounting, green accounting, etc. It covers different subjects directly or indirectly. So, then we will move to the first point over there, financial accounting. So, financial accounting provides the historical data to the management. So in the financial accounting, while when why you want to prepare the financial accounting in the sense to see the profit as well as sales and even the trading account and profit and loss account, they're preparing the financial accounting as well as financial accounting statements we're going to prepare. While coming to the cost accounting, so cost accounting techniques like standard costing, marginal costing, as well as CVP analysis, etc. So why that cost accounting is going to use in the sense in the when you are inventory as well as manufacturing company, so you can see that while you're going to fix the price for the particular product in the sense, that the standard production as well as we can see variable cost, fixed cost, and then semi-variable costs should be going to identify. So here are used to management to cost control as well as the profit planning. So profit planning in the sense, especially the company has to take a proper call and all. So cost accounting is an essential part of the management accounting. Without management, without financial accounting, without cost accounting, management accounting will be not there. So all these accounting should be very, very important. So next one, repeating to the reporting financial management. The financial management is a concern with planning and controlling with the firm. And although the financial management is emerged to separate management accounting includes extend financial management also. So while financial management you are going to use for the finance related to the planning and controlling to the finance. We'll move to the next point, budgeting and as well as forecasting. So budget in the sense, the forecast of the business plans. It also provides the information related to the budgetary control. So each and every departments are supposed to be achieving their targets in framing the budgets also. The comparison of the actual performance with the budget figures will be given idea of the management. For example, the government of India as well as state government of India, once in a year they're going to conduct the budget. Okay, how they're going to arrange the funds. So, for example, collecting the taxes from the individual person as well as road tax, property tax, like that and all different sector they're going to arrange they're going to collecting the revenue and all. So that one they after that they're going to spend for that. For example, education, military, agriculture, and then defense. Like this, they're going to implementing for the budget next 1 year. The future plan, course of action, and all they're going to implement over the same way. Also, yeah, budgeting and controlling takes place for the even the manufacturing company also. So next one, inventory control. So management accountant will be guide the management to when and from the where to purchase, how much you have to purchase. See, in the competitive world, we can see the cost cutting should be done with the good quality products with the proper price we are supposed to get. So the studies inventory control will be helpful for taking the managerial decisions or reporting. So time to time they have to reporting to the management. So when the accountant of the company as well as the secretary of the company, they have to arrange the meeting, and then what they have to do in the sense that timely they have to conduct the meeting. Either maybe the reports also they have to maintain the internal reports, audit reports, either maybe different sets of activities. Maybe the information should be on a monthly, quarterly, or half yearly report should be submitted to the top level management in the business hours. So interpretation of data. There are n number of informations are available. So in the financial accounting as well as cost accounting as well as management accounting, the management accountant interprets the various financial statements of the management in a simple language, which means the data idea of about financial learning, position of the company, profit and loss account statement, and then proper information should be given. For example, when the purchase of plant and machinery, proper bills, vouchers, and should be to be presented to the auditors of the company also. And even though a proper financial statement should be had to submit, if the wrong statement is given in the sense, the figures and analysis very difficult to identify. Also, the reputation of the company also is going to be on to loss. Also, that's the reason they have to be proper, and as well as information should be in the a proper way. So next one, internal audit. Internal audit system is necessary to judge the performance of every department, and the internal audit helps the management to fixing responsibility of different individuals. So finally, your functions or objectives of management accounting, these are the points that are there. We quickly will move quickly. I'm going to discuss about these points that are there. Planning and as well as policy formation. The statements of past results and give the estimation to the future. So when you're preparing the policy for the particular management in the sense, the data should be very, very important. The data in the sense, preceding previous year, that information, the sales, the profit of that one should be given proper way. So the coordination and between the second point, the coordination between the different business activities for achieving their organization goals. Then the budgeting will be plays very important role. So controlling in the sense, management accounting helps to control the activities through the different techniques like standard costing, budgetary control, ratio analysis, and then compared with the other objectivities. So this kind of what we call information are necessary to take the proper measures of actions in the business organization. So decision making. So decision making in the sense accountability as well as the management have to take the proper decision. They prepare the reports, feasibility reports, alternative to make assessment their financial implication. So suppose for example, if the company product is not able to growth in the sales in the market, in that particular cases, why our company product is going to fail in the market. So they have to do the proper research and development for to boost the sales. So like this, the proper decision the company is supposed to take. Then organizing. It includes the delegation of authority, fixing the roles and responsibility to the management accounting, connected the establishment of cost centers, as well as the different areas, as well as functioning there, the aspects of helpful for setting up the effective cost control measures also they have to take in the proper organization as supposed to take. So now we'll move to the differences between the what we call management accounting as well as financial accounting. So purpose in the sense, financial accounting reports post in the sense past profitability, the profit, sales, these kinds of information you're going to see. While coming to the management accounting, the forecasting to the decision making information. So financial accounting it deals with the information, financial statements like trading account, balance sheet, profit and loss account, etc. The management accounting reports to the only to the materials, facts, and figures, and then the users. We're coming to the users. Financial reports used by external users, investors, tax authorities, as well as creditors. Management accounting reports to the internal purpose only for managers as well as employees inside the organization. So rules and standards you can see in the financial accounting must follow the strict regulatory standards like GAAP and or IFRS. Management accounting has no set of rules and regulation. It focusing on the relevance to the standardization of material facts. So next point, time focus. Financial accounting is historical, past performance. The management accounting is proactive, future oriented, and then projection, planning, etc. Well, coming to the scope in the sense of financial reporting have that limited the scope in the organization. Management reporting provides a detailed information, specific departments, inventory department, for example, inventory department, and then what we call the different sets of departments, the products, the projects, etc. These kind of each and every individual things they're going to concern. The frequency, the financial reports are typically either in the financial accounting once in a year, either maybe quarterly, half yearly they can prepare. The management reports can be prepared immediately at maybe daily basis, weekly basis, a monthly basis. For example, inflow of cash, outflow of the cash, and maybe a projection of the cash, how they're going to arrange the funds, and for the quick decision, they have to maintain every day also. So audit requirement, financial statement must be audited by an independent party, but in the case of management accounting reports, confidential not will be audited. Well, difference between the cost accounting as well as management accounting, we can see here. The scope of cost accounting is limited, but in the scope of management accounting is a wide. And then it based on the data driven from the financial accounting, but in the management accounting, data driven from financial accounting, cost accounting, and management accounting. Then cost accounting is being installed without the management accounting, but management accounting cannot be installed with the a proper cost accounting. See, for example, inventory control and all, as well as preparing the planning, preparing the cash inflow, outflow, and the financial statement, financial report should be prepared in the help of the cost accounting as well as financial accounting. In the cost accounting, main objective to find out the cost control and profit maximization. But in the case of management accounting, planning, organizing, directing, as well as decision making, the for profit maximization is the main objective. Evolution of cost accounting is due to limitations of financial accounting. The evolution of management accounting is due to limitation of cost accounting. So the cost accounting is compulsory. It's a selected industry, but in the case of management accounting, it is an optional. Thank you. These are the information I'm going to give today's this class. Thank you.